Let's talk about the Indian market, because heading into this week, it really feels like a pressure cooker, doesn't it? You've got these powerful forces pushing and pulling from every direction. And today, we're going to decode exactly what's going on and what it all means for Monday morning.
So the big question you're probably asking is this. After the solid run we've had, is the market about to crack under all this strain, or is it just building up steam for its next explosive move? All the signs are pointing to something big, and we're going to break it all down for you.
All right, here's how we're going to tackle this. We'll start with a quick look back at where we left off last week. Then we'll get into the three huge events that are turning up the heat. We'll decode the charts to see the warning signs, uncover a really fascinating standoff between retail and institutional investors, and finally, lay out a clear game plan for Monday.
First up, let's set the stage with last week's market action. To figure out where we're going, you've got to know where we're coming from.
So after a really strong three-day winning streak, Friday felt like the market was just pausing for a breather. It was a classic day of profit-taking, everyone just catching their breath before this high-stakes week kicks off. But underneath that quiet surface, some really interesting things were happening.
Okay, so here are the numbers. The Nifty and Sensex both closed a bit in the red. You can see sectors like IT and private banks were feeling the pressure. But then you had real strength in PSU banks, metals, and pharma. The real story, though, is that last point. Our domestic institutional investors, the DIIs, the big Indian funds, were huge buyers. We're talking over 2,000 crore pumped into the market. That's 9 straight days of them buying, and it's been a powerful force holding the market up. That's the setup. But a quiet Friday is about to lead into a very, very noisy week. We've got 3 massive events all converging, and each one is capable of really moving the needle. This is where the pressure starts to build.
Monday, September 22nd, is going to be a critical day. The controversial H-1B visa fee hike kicks in, the much-awaited GST 2.0 finally rolls out, and those crucial trade talks between India and the US get started. It's basically a perfect storm of news.
Let's start with the one that's causing the most anxiety. A staggering $100,000 annual fee for H-1B visas. Wow. Since over 70% of H-1B holders are Indians, this is a direct and massive hit to the bottom line of our IT giants. The fears of a sell-off in the IT sector are very, very real.
But on the flip side, we have a huge positive catalyst. GST 2.0 is all about simplification. As you can see, we're going from a messy 4-slab structure down to just 2. And the biggest deal is that almost 90% of the items that were in that highest 28% tax bracket are now dropping down to 18%. That's a massive tax cut, and it's expected to be a huge booster shot for domestic spending. Think everything from cars to houses.
So we have these powerful forces pushing and pulling from the outside. Now let's look inside the market itself. The technical charts are like the pressure gauges on our cooker, and right now they're showing some definite signs of stress. On the Nifty's daily chart, a pretty concerning pattern is forming. It's called a hanging man, which, doesn't exactly sound optimistic. Just think of it like this. The market climbed way up, but now it's just kind of hanging there, exhausted, not sure if it has the energy to go higher. Now, it doesn't guarantee a fall, but it's a clear warning shot that the bulls might be running out of steam.
So let's get specific with the numbers to watch. The ceiling, the major resistance, is sitting right at 25,400. There's a massive wall of bets there that the market won't go higher. On the flip side, the floor, our key support zone, is down between 25,200 and 25,150. As long as the Nifty stays above that floor, the bulls are still in the game. But if it breaks, the trend could weaken, and fast. And this is where the story gets really dramatic. This isn't just about charts and news anymore. Right now, there is a massive, high-stakes disagreement playing out between 2 very different groups of investors.
Seriously, forget what the experts are saying for a minute. The real story is in where the money is going, and right now, the money is split. You've got 2 camps placing huge, completely opposite bets on what happens next. It is a classic standoff. On one side, you have the retail investors. They're betting on calm. They're selling options, which is a strategy that wins if the market basically goes nowhere. On the other side, you have the institutional giants, the FIIs, and they are betting on chaos. They're buying up options, a strategy that only pays off if the market makes a massive, explosive move.
The strategy these big institutions are using is called a long strangle. All you need to know is that it's a super aggressive, high-conviction bet. They're basically screaming that this current calm is about to end, violently.
They don't care if the market rockets up or crashes down. They just believe a huge, fast move is right around the corner. So who's right? The retail trader betting on calm or the institutional giant betting on chaos? That is the billion-dollar question that's probably going to get answered this week.
So, with all this pressure building up, how do you even navigate it? Well, that brings us to the game plan for Monday morning. How do we watch for that pressure release valve? The smartest strategy here is to keep it really simple. On Monday, just watch the first 15 minutes of trading. Mark the high and the low of that opening period. That little range becomes your guide for the entire day. If the market breaks above that high, it's a signal of strength. If it falls below that low, it signals weakness. It's a clear, simple way to follow the money in real time. And here's where to focus your attention. The sectors that were already strong, PSU banks, metals, pharma, are definitely worth watching. The big story will be those potential GST beneficiaries, auto, FMCG, real estate. You want to watch them closely for any positive reaction. And of course, everyone will be keeping a very close eye on the IT sector, which is going to be under immense pressure from those H-1B headlines. So there you have it. You've got positive domestic news fighting negative global news. You have technical warning signs flashing red, and you have retail traders in a massive standoff against the institutional giants. The pressure cooker is whistling. The only question left is, which way does it finally break?